Thank you for joining me this Friday, the 23rd of August. I'm Grady Wolf, market analyst for Bell Direct, and this is the Week 3 reporting season wrap and our weekly market update. So far this reporting season, 93 companies have reported and released results, with 33 beating expectations, 27 meeting expectations and 33 missing expectations. This week cemented some key themes paving the outlook for FY25, including upbeat earnings masking investor reactions to results as share prices rallied on strong outlook over sometimes very disappointing FY24 results. Margin contraction is a common theme across sectors expected for FY25 as a high-cost environment prevails. And retailers have surprised to the upside as Aussies kept spending despite high cost of living pressures during the inflationary environment that was FY24. Super Retail Group ASX SUL rallied on Thursday after releasing record FY24 results that further proved the theme of the reporting season, that retailers have remained resilient, well, extremely resilient, despite the challenging market conditions for the last financial year. For FY24, Super Retail Group reported a 2% rise in group sales to a record $3.9 billion. Group gross margin rose 10 basis points to 46.3%. An 11% decline in normalised NPAT was reported to $242 million. Expanded store network was reported with 28 new stores opening. No drawn bank debt was signalled and $218 million in cash was reported. And a fully franked dividend or final dividend of 37 cents per share was announced, and a special dividend of 50 cents per share. Totaling the full year of dividends paid, Super Retail Group is rewarding investors with 119 cents per share in distribution over FY24. The BCF, Rebel Sports, Macpac and Supercheap Auto owner also had investors excited by the strong start to FY25, with like-for-like sales up 3% and 5% total sales growth for the first 7 trading weeks of FY25. A similar story was told by Universal Stores ASX UNI impressive FY24 results as the younger generations continued buying up fashion during the high cost of living environment of the last financial year. For FY24, Universal reported 9.7% sales growth, 16.6% growth in underlying EBIT, driven by gross margin improvement, cost control and sales momentum building in H2. Universal also reported strong like-for-like sales in the US, with growth of 6.6% in H2, turning around from the 5.4% decline in sales in H1, and the company declared a 19 cents per share final dividend, which is double that of the prior corresponding period. The gross margin expansion was a rise of 110 basis points, suggesting increased pricing efficiency and strong cost management. Universal's underlying NPAT also rose 18% to $30.2 million, and net cash rose to $14.3 million from $6.6 million in FY23. It's no wonder investors bought into Universal on Thursday after the release of such impressive results, but it doesn't stop there, as FY25 has started with even greater strength, as sales for the first 7 trading weeks are up 15% in the US, and the company expects 4 to 6 new US stores to open this financial year. The retail rush wasn't felt across all retailers though, with investors fleeing the reject shop and beacon lighting this week as inflationary pressures hit the bottom line results for these retailers in FY24. Logistics and technology market darling WiseTech Global ASX WTC soared on the day results were released and the following session, as investors were impressed by not only the company's FY24 results, but its outlook for a strong FY25 too. The share price jumped 28% over this trading week as investors welcomed the FY24 results, including total revenue increasing 15% organically on FY23 to $1.041 billion. CargoWise, the company's core software, revenue lifted 19% organically to $880.3 million. Underlying NPAT rose 15% on FY23 to $283.5 million, and the final dividend increased 10% to 9.2 cents per share. WiseTech's EBITDA margin also improved 40 basis points to 48%, and free cash flow increased by 14% to $333 million. WiseTech's results were driven by its recent aggressive acquisition strategy, flowing through to improved financial results. On an outlook front, WiseTech Global reported FY25 guidance, including the expectation of 25 to 30% revenue growth on FY24 to $1.3 to $1.35 billion, 33% to 41% EBITDA growth, and price increases to offset inflationary pressures. Following the release of the results, the company's market cap soared to $40.61 billion. The price of gold has been running hot to a record over $2,500 per ounce in recent weeks, especially this week, which paved the foundations for a strong second half of FY24 and tailwinds heading into the new financial year for our gold miners. One beneficiary of the strong gold price this reporting season was Northern Star Resources, ASX NST, which reported record cash earnings of $1.81 billion, up 48% on FY23, and annual gold sold was up 4% to 1,621,000 ounces, against a rise of 5% in AISC, or all-in sustaining costs, both of which were in the guidance range set for FY24. Northern Star's balance sheet remains very strong, with net cash of $358 million and record cash earnings delivered this year enabled the gold miner to deliver an unfranked final dividend of 25 cents per share and a record payout for FY24 of 40 cents per share. On the outlook front, Northern Star is guiding towards gold sales growth to 1,650 to 1,800,000 ounces at all-in sustaining costs of $1,850 to $2,100 per ounce, which is slightly above the AISC reported in FY24. And that wraps our Week 3 reporting season coverage. Stay tuned for our final week of reporting season coverage next week as we cover key results out of Fortescue, BHP, Coles, Woolworths, Qantas, Mineral Resources, Ramsay Healthcare, Wesfarmers and more. Now let's look at what happened on the local bourse this week. Locally, from Monday to Thursday, the ASX 200 rose 0.7%, boosted by the tech sector rocketing 9.08%. The winning stocks on the ASX 200 this week were led by WiseTech Global, rallying over 28%, while A2 Milk led the losers with a 15.83% share price depreciation. On the broader market, the All Ords rose 0.83% over the 4 trading days, led by Hum Group soaring 41%, while Mader Group lost 19%. The most traded stocks by Bell Direct clients this week were Yancoal, while clients also bought into Fortescue, BHP and Woodside, or the big miners, and clients also took profits from the big banks again this week by selling out of Westpac, ANZ, NAB and CBA, and our clients also sold out of Evolution Mining and CSL over the 4 trading days. And the most traded ETFs this week by our clients were led by Vanguard US Total Market Shares Index AUD ETF, SPDR S&P ASX 200 ETF, and Vanguard Australian Shares Index ETF. As for what to watch next week, we may see investors respond to Australia's CPI monthly indicator data out on Wednesday, with the forecast of a slight drop to 3.7% in July from 3.8% annually in June. Overseas, US GDP growth rate data is out on Thursday for Q2, with the market pricing in a rise to annual rate of 2.8%. Any reading below this could see a sell-off in equities as investors fear a recession is looming over a soft landing. US core personal spending month on month for July is also out next Friday, with a forecast of a decline to 0.2% from 0.3% in June. Over in Europe, the Eurozone flash inflation data is out for August on Friday, while in Asia, China's manufacturing PMI for August is out on Monday, the 2nd of September, with the market forecasting a decline to 49.6 points from 49.8 points in July. And that's all for this week. Have a fantastic Friday, a wonderful weekend, and happy investing.